Hello and welcome to Closing Trades right here on ET Now. And after what looked like a quiet start, we've actually picked up nicely in the green. So about a 0.5% uptick is what you're currently sitting on. We're back, in fact, at that 19,400 print. And this without any support from key heavies like Reliance Industries, which continues to reel under pressure, down about 1% as we speak for RIL. Also, there's Geo Financial, which has debuted on the street. It's a 5% downtick that it continues to latch on to. And for the better part, it's been lower by about 0.5% or so. So Geo Financial, along with Reliance Industries, they're the ones which are beleaguered in trade. If you were to really pinpoint one sectoral trend, that's clearly infrastructure and power, led by Adani names. They are the ones which are really perking up in trade. In fact, power is quite the big performer today. Everything from an NTPC to a Tata Power, Adani Power, these names continue to hold very, very smartly in trade. Besides that, you can't really drop any sectoral trend. Yes, most sectors are in the green, but there are no big movers in there. Persistent, India Cements, GMR Infra, Astral, these are some of the liquid names which are actually holding out in trade. And other than Reliance, there's Idea, Hindustan Copper, Exide and PI Industries, which continue to languish as well. So let me bring on board Kunal, Nooresh as well as Vinit Bolinjkar to figure out where the market is headed and what is it that you should be doing in the near as well as the longer term. Kunal, hi afternoon. Let me start with you. What's it looking like for the index?
It's a good bounce for the index, but I'll not call it as an ideal bounce because we're still missing that zing of large cap stocks outperforming. So, even in the top 5, top 10 names on the F&O front, you don't have too many index stocks which are actually outperforming. There are not too many large cap, index names which are showing signs of any kind of short covering or even long built up or some increase in delivery data. So I think that's one of the major reasons why I would probably believe that we may just go through this process of bounce, maybe another 2 days of confirmation where we see large cap stocks starting to outperform. That's where we'll start to build up more confidence. But other than that, if the large cap stocks don't participate and the action is more towards the mid caps and small caps like what we've seen over the last couple of days, we'll just term it as a short-term bounce on the index.
Nooresh, since you've been tracking the charts of Reliance pretty closely, what happens now? Geo Financial has listed 2,500 plus levels on RIL. When do you see a meaningful move on RIL?
So 2850 was the previous high. So 2600 remains that critical level now. Very clearly now that level becomes 2600 given that today Geo Financial is listed at 250 rupees roughly, or could be a little lower going forward. So 2600, whenever we cross that on Reliance Industries, that would be a game changer for the trend for the stock. And on the lower end, 2460, 2480 remains a support. So for now, looks range bound, but on radar whenever it crosses 2600. So the structure is still not bad, but the momentum should come post 2600 levels.
Okay, let's see how soon we clock in that 2600 mark on RIL, currently just about hovering around that 2500 mark, and clearly one of the key pressure points in trade today. Other than M&M, Maruti, HDFC Bank, SBI, they're also not really participating in today's move. Vinit Bolinjkar as well on the show. Vinit, hi afternoon. Just looking at the strength across the power sector, Vinit, and especially the kind of validation that you've got from GQG as investments as well, who have been buyers in recent blocks, both in Adani Power as well as JSW Energy. But given the run-up that's already transpired in most of the power sector names, along with their ancillaries like a PFC, REC as well, do you think that one can even get in at these levels?
See, it's a structural bull market. We have a long way to go. We're going to add about 450 gigawatts of power in the next 6 years. So I think given these kind of settings, and this entire infrastructure which is going to come is not going to be replicated it's not going to be brownfield. It's all going to be greenfield infrastructure, and that bodes very well for the entire ancillary pack as well as for the distribution and power generation companies. Notably, we like Coal India because I think over the next 4 years, we're going to get some very strong thermal power additions coming through. And along with that, we also like BHEL within the segment.
Vinit, but let's understand the setup of the power space. Yes, demand is moving higher. Regulations are getting better, but there are elections around the corner. I was reading somewhere that one of the political parties has already made a claim that will be, you vote for us and we'll give you free bijli and gas. Discoms are not in a great shape. So while Central is doing great thing, there are state elections, Rajasthan, Chhattisgarh, Madhya Pradesh, and there is Mehengai, and there is central election next year. Don't you think this sector in a sense will not enjoy the benefits? I mean, look at OMCs, Vinit. They were used and misused when oil prices they went higher because of political compulsions. The same could happen to power.
Yeah, so we are baking in a scenario where we expect the present incumbent, which has been very, very disciplined, moving out of the scenario. So, whatever little readings that we have done on the political front, we believe that there's a very, very good chance that the existing incumbents would continue. They also have tacit support of the deep state, which is moving towards India. Because if you see globally, Europe is outspent in terms of spending power. US defense spendings have climbed interest rates, and there's a signal when they abandon their economies. And if you see, the only two geographies which are going to grow is going to be Africa and India. And between the two, India is politically very stable. So, and if you want a stable and a strong government, which the present incumbent has been given, it has got tacit support of the deep state. And I'm sure that the way the things is playing out, I'm quite positive that the present incumbent will continue. And given that kind of a scenario, there is very little that the political dispensations at the state levels can do, because people have figured out in Karnataka what happens when you do all this stuff. So I guess, I would want to play the bull story, and only if the other, there's a spring of a surprise in terms of other dispensations coming into power, will I change my view. So till then, I will continue to be positive.
Kunal, you tell me, where within the power do you have conviction to buy even at these levels? Because most of these stocks have already run up quite a bit.
See, I think NTPC still looks very attractive to me on the charts. I think the stock has shown signs of a lot of consistency, and when you see change of behavior, change of trend for these stocks, and we are talking of it from a longer term perspective, those trends they last significantly higher. So just for an example, REC, PFC, these stocks, they managed to break past about their individual 9-year, 10-year, or maybe even more in terms of time frame highs for themselves. And look at what has happened for the stocks post that. We've seen these stocks moving up another at least 30 to 40% above the 10-year breakout for themselves. So I'm not expecting a similar kind of an upward trend for NTPC, but in terms of price trajectory, the stock should continue its uptrend. 215, 16 is where the stock is trading right now. I think that's a solid bet from current levels.
Vinit, I'll just have another follow-up question on the power space. There is NTPC on one side, pure utility, a bit of a green play, but a lot of thermal play. There is Tata Power, which is giving me transmission distribution, and also a play on renewables. They are saying we will not expand in thermal. There is Adani, which is giving me perhaps a play on distribution and little bit also transmission. What is the best model to buy? Because power is a very generic word. It's indeed very generic.
So I'll tell you, between all these counters that you mentioned, I think the Adani transmission looks to be very, very intact. So there are two reasons for this. Is that irrespective of the scenario that plays out in the power sector, the transmission segment has the right of first access to all the collections of the discoms. So what happens is the discoms, they have to put money in an escrow account, which the first access is with the transmission segment. Secondly, as I told you, if you're doing 450 gigawatts of power generation capacity that we are putting up, you will need equivalent transmission networks, because you're not following the same routes of the existing infrastructure, because the renewable power sources are in different locations. So that is where Adani transmission scores out here. In addition to that, you have the play on the one of the busiest electricity consuming centers of that is Mumbai. And here the company is spending very heavily on their regulated asset going up every year. So they retain their they retain their EBITDA margins and also ROEs, right? So these are the two plays. So I think between all these plays, this stock seems to be quite risk averse. Additionally, you have to put in the smart meter vertical that is coming up. So I think Adani Energy Solutions, that is called now, seems to be a better bet compared to all the rest of the other guys.
This entire power space, in a sense, has completely, risen from like a phoenix. Persistent. Nooresh, this is the odd one out, right? Isn't it? I mean, it fell less in the IT space, and it is the first one to be off the block in terms of recovery. Persistent, Nooresh, is at 5,000 already.
So this was the first one to actually hit a new 52-week high. So it hit a new 52-week high in March of 23 itself, and the whole sector and even the markets were not in the greatest of the position. Then corrected by March end with the markets, went down to 4,000, and we are now back closer to 5,000. What is interesting is if you look at the previous top, which is where it topped out, was at 5,000 in 2022, which is where the whole of IT topped. And for the last 6 months also in the recovery, every time it has come closer to 5,000, 5,200, it has seen some bit of a correction. Now it has started making a higher base, higher bottom at 4,600. So the next league for the stock starts once it sustains above 5,000, 5,200 mark. So that would be a bigger breakout. So the trend is positive for now. Could be some more consolidation before it can break 5,000, 5,200. But clearly the first one to actually recover the most in the IT pack. So should be kept on radar. A leader move can continue going forward as well.
Okay, let's slip into a very quick break on that note with news that we're holding out okay. After a quiet start, we have picked up. But again, that large cap, heavyweight participation is a miss. And yes, Reliance continues to be a drag.
Off from the day's low, almost at the highest point of the day. 19,400. Yes, it's 19,400. Now, we walked into trade this morning. There were more signs of a breakdown rather than a bounce back. FIs were selling. There was a lot of global red. Yields were exactly not behaving themselves in the right manner. And globally also 10-year paper had shot up. So even though you did not have too many telltale signs of a rara comeback, I think markets have delightfully surprised everybody. Nifty has reclaimed. It's not a big rally. It can be washed out tomorrow morning itself. But Kunal, the fact that you're going again, you're bouncing back. You're going again, you're bouncing back. Now you can argue and say that दीवार को ठक ठक करोगे तो टूट जाएगी. Or I would say दीवार इतनी strong है वहाँ से bounce back हो जाएगा. One of them is true, right?
Absolutely, Nikunj.
The Fevicol का जोड़ है.
That's one of the reasons why we were not anticipating, the sell-off till the time the confirmation doesn't happen. And that's why we were insisting that, let the markets break below that 90,300 mark and let it show substance of a change of trend, because those intraday dips towards 19,300 mark and then a bounce back again doesn't indicate fragility for the markets. But on the other hand, today's bounce, and I was pointing this at the start of the show, that it's not a very strong and a solid bounce because you don't have too many large cap stocks participating and showing signs from in terms of recovery. So I think that's the missing factor for the market so far. So hopefully, assuming if this bounce continues for another couple of days, and then you see a large cap stocks number of participating, then we can change the view from expecting this to be a mild bounce to maybe a contra trend on the upside.
Important to mark what the European markets as well are up to, and pretty much across the board you are seeing 0.5% to about 1% kind of gains coming in. China's central bank, remember, has cut its one-year loan prime lending rates by less than expected and left its 5-year rate unchanged. The market, of course, was anticipating a steeper cut and providing some more stimulus to the economy. So clearly it's been a little bit underwhelming, this move by the Chinese central bank. That said, let's see how actually Asia shut shop in trade. And you did have dips coming in for China, 1.25%, no less. And then Shanghai as well, which lost about almost 350 points, equating to about a 2% cut coming in. Vinit, where do you think India is going to draw cues from? Will it be a global event which is going to dictate our markets? Or do you think it's going to be something internal like an inflation?
So there are a couple of things that I would like to draw your attention to. One is that, the US Treasuries 10-year have broken all levels. So they're looking very bearish, number one. Number two, if you talk of China, there is absolutely panic in their economy. They're not able to, they stopped giving unemployment data. So that is a sign of concern. And if we look at the Chinese debt, which is about $52 trillion, bulk of it which has been funded by Europe. So I don't think the cues are going to come from the international markets on the positive side. If at all, they're going to be negative. And we have seen RBI first suck out CRR I think the next would be a token rate hike that comes to. So that is what is the scenario that I'm looking at. And so if we break the bottom of 19,300, so I believe that market could fall quite a bit, because in the last few weeks you've seen that the index stocks have just not performed. It has absolutely been a screeching rally, which has been led by the small cap and the mid cap stocks. Currently, the small cap stocks still look very cheap. They are at 13 times FY 25 earnings. So, although there are a number of indicators which point to, the move reaching slightly uncomfortable levels, I still believe that, if you have a good selection of stocks out there in the small cap, is the market to play in the current moment.
We may talk about this market doing extraordinary surge in this year, but frankly, from the beginning of the year, just look at the beginning of the year. Don't look at April. I mean, then you will become selective in terms of data. 7%. Now you look at US markets, 44% up for Nasdaq. You look at other markets, the emerging markets also. India has done not like at the top of the heap. So for those who think that, okay, it's been a great run, great year, everything is just running on India's way. No, equity markets have not done that well in terms of the relative outperformance. Even though flows have been strong, earnings have been strong, macros have been decent. Another stock which is popping up, Trident. Nooresh, it's been a yes and a no, on and off kind of in stock. Trident. Today it's just going gangbusters on strong volumes.
So very large volume seen today, and this is generally the last stock to do well in the sector. So if we go back even into the history, this is how it has performed. Now, if you look at it, what has happened with the names, we've seen a good move in Welspun India. We've seen a good move in Indocount. We've also seen a move starting up in a Himmat Singha. So Trident was the one which was left, not the market favorite as such, a very speculative stock in that sense, but technically a breakout done today. Given the sector has been in a lot of momentum, the stock can go towards that 45 mark slowly and steadily. So looks positive, but there are better choices in the same sector.
A lot of price volume breakouts, HEG, you got Graphite India. I just don't know why, because for HEG and Graphite India to do well, steel has to do well. For steel to do well, China has to do well. And for China to do well, a lot of things have to change fundamentally in China. And I really cannot find this kind of a correlation. Vinit, what's the best way to bet on this entire food inflation? I mean, tomato prices have surged, onion prices have surged, wheat prices have surged. What's the best way if somebody says, okay, this is a trend, how can I maximize from this?
So, you can only play the rice theme because everything else gets downplayed by the government. So if you see, tomato surge has been countered by imports from Nepal. Urad dal and other dals are being bought in from Mozambique, from Myanmar. So government has set aside a $1 billion fund to purely tackle this inflation. So it's going to be a combination of price duty cuts for fuel and flooding imports and raising export duty on onions, etc. So they're going to play that way. If you really want to play the story, the way to play this story is to play the rice export volumes, and which is Basmati plays. And here I think one of the best plays is LT Foods. There's KRBL, but currently I think LT Food has got good momentum, as well as it has catch up to play with KRBL in terms of valuations. So that is the one stock that I will.
Right. In fact, since we're on the subject of what's really happening with some of these names, like, we've been highlighting in HEG, Graphite India, let me quickly take it across to Lisa and find out why these stocks are buzzing.
Right, so both HEG as well as Graphite India, both are Electrode manufacturing company. They are surging in trade today, and that is on the back of a report that has been released by Jefferies. So maintaining a buy on both the stocks, Jefferies has hiked the target price for HEG, a straight 48% increase for HEG. They have hiked the target price to 2,170 from 1,460 earlier. And for Graphite India, maintaining a buy on the price, they have hiked the target price by 23% from 420 to 500. 115. Now let's look at the reason why they have hiked the target price. Well, the reason for that is that Jefferies believes that both these companies will benefit from the increasing focus of electric arc manufacturing. So it is a play for decarbonization, and by 2030 EAF production ex-China could rise by 100 million metric ton, thereby increasing potential demand for electrodes by 200 K metric ton. So both HEG as well as graphite, they are export-oriented players in this, and it augurs well for them, because for HEG, exports contribute around 70%, while for graphite, they contribute around 50%. So on the back of decarbonization being a strong catalyst for these companies, both these companies are in focus today.
That's the Jefferies report, and I don't know whether it really holds a lot of substance. Vinit, crude seems to be moving in the wrong direction, and China seems to be again moving in the wrong direction. So either commodities have to come down or China has to recover. And I've never seen this kind of a toss-up. Which way would you lean? Buy the China story and revisit metals and commodities, or sell commodities because China isn't going to do anything?
It's a very very difficult situation. But within the commodity space, I think oil has a better footprint going ahead. The reason being that oil consumption has not come down. US special reserves are at 14-15 days, and they need to stack up. And there is constantly action from the OPEC Plus every time the US is coming into the market to cut back on production. So I think oil is going to be a play in the next 6 months, especially once the winter sets in. And the countries in the higher latitudes, their energy consumption for climate change starts peaking.
Okay, Vinit, great to have you on the show. Thank you as always for taking the time out and joining in. In fact, on that note, let's get some closing ideas going as well. Nooresh, what's on your list?
So that would be a buy on NMDC. The stock has sustained above that 115 mark for the last couple of weeks, as well as in touching distance of a short-term breakout. Two tops around 119. Today it's come close to that. Sustaining above that would be a quick move to 130, 140.
What you?
So I'll go for a buy on HUL, Hindustan Unilever. And my sense is that most of these FMCG stocks are extremely oversold. So these stocks should make a decent comeback over the next couple of days.
Okay, on that note, let's take a very quick break. When we come back, track the last half an hour of trade today.